get into programs that'll help you and train you on how to build it. But that first step is you have to design a business model that is desirable.
When I initially moved back to Pensacola, I had a meeting with Lloyd. Lloyd invited me for breakfast, and I was telling him, man, I still have an idea for the entertainment industry. This is what I wanted to do. He was like, all right, I got Startup on the Blocks. So I need you to start coming to Startup on the Blocks and get a little more information on how to work through the tech ecosystem, and take your idea and we'll get you where you need to go. My company is called The Know, is an app that is streamlining business for the entertainment industry. Yeah, so if you're a musician, what you would do is pretty much jump on the platform, you'll create a profile, but the way we created the profile is pretty much a cleaner way. So now if they want more information about you, you'll connect your social media platforms, your streaming platforms, and that way they can go directly to it. What we also have included is your calendar. So pretty much you can set your days, you can set your price for your days and automate your booking. So initially talking to Lloyd, my idea was all here, it was there, it was over here, it was over there. It was like, all right, Quinn, I get it. You got a lot that you want to do, but we need you to bring it in just a little bit and then work on your pitch, your story, and how you're going to bring it full circle to get people to understand what you're trying to create.
Most of the programs here wasn't inclusive, and so we said we'll focus on helping founders of color. We also start at the beginning of the thing, at the idea stage, whereas a lot of the programs you see here locally, they start after you're up, and that's not very efficient unless if you don't have a lot of money, you can't recover from your mistakes. And the lean startup system, it actually helps you make mistakes faster before you spend a lot of money. You don't actually start building anything until you got customer buy-in.
There was a need for small businesses to bring brand awareness to their business. I see there's a lot of makers and bakers that they're making all of these goodies and these products, but they can't market it, they can't sell it at the same time, and there needs to be kind of like that middleman, that middle person to help bring economic growth to some of the small businesses in Pensacola. So Taste of Pensacola, I came up with that idea during the pandemic when I saw things at that time that Amazon couldn't fulfill. They didn't even have those products, but the local people in the community, they did. And so there was a ton of people coming out saying, hey, I make masks. I'm like, wow, this is amazing, all the local people here that are just as talented that can actually make those products. And so I wanted to kind of showcase who they were. So with Taste of Pensacola, our income streams, we have several of them. We have the corporate America, we do corporate gifting, just regular consumers, different Pensacola natives that don't live here that want to purchase our boxes, like a taste of weddings, distribution. So we also do bulk sales. So for a private airline, if they want some local snacks and goodies on their passenger flights, they will come to Taste of Pensacola and we will source their vendors here locally, and we'll give a small business owner an opportunity to have reoccurring monthly sales. I've always had a really big vision for Taste of Pensacola. I knew that it could go beyond just local. I know that maybe other communities could possibly use the same platform that I'm trying to build. And I always have these big visions, but I never know how to even get there. Where do I start? I know it's more than, there's a lot of technical things behind it. I know there's a lot of research, but that connection, I never had it until, thankfully, I met and was introduced to Startups on the Blocks and was able to just learn more about how to grow it in terms of data. Things I just never thought about, framework, words like traction. There's a lot of things that I just did not know about, and language that I need to know in order to get funding for my business. There's just a lot that I didn't know.
I would go to the stores and look online. They didn't have a wide variety of natural hair products about 8 years ago. And the ones that they did have, the ingredients, it would say that they were all natural. And when I would research the ingredients, a lot of the ingredients were not natural. I make everything, my shampoo, conditioner, I have an oil that I make, and I have 2 different separate butters. Like I had some people who were completely bald and grew their hair. It's about giving women their confidence back in their hair. I have this salon and then I have a second salon, and I have my products in about 5 beauty supply stores. So I need a manufacturer to keep up with the demand at this point. Startup on the Blocks has helped my business grow, send me to different people. I'm able to do different pitch competitions to apply for grants in the community for small businesses. Lloyd's a really good person to connect with. He has a lot of resources here in the community that can help small businesses grow. If you have a product out there and you're trying to go big time, he's the person that you would want to meet with.
So it's really important to have some type of support because 9 times out of 10, most founders start out on their own. And to have somebody that has an idea of how the ecosystem works and is able to tap into other resources and bring back to the community, and that pretty much has encountered some of the roadblocks or going through the same roadblocks that we're currently going through and understands where you're at, your culture and how you respond to things, is a big help because you don't really have too many people that have access to what we have access to here in the community. And a lot of people believe that you have to leave and go to bigger cities to do the things that we're doing here. But I mean, it's one thing to have exposure, but you have to actually know it's here in the community in order to take advantage of the resources. So I get approached and I talk to friends all the time that wants to either start an idea or hear that I'm actually doing the app and wants to know more information about how are you doing it or what's the process, what's the path. I'm like, man, we have somebody here, Startup on the Blocks, Lloyd Richard. And Lloyd is here, he's a great resource to the community and to founders that's trying to learn the ecosystem. So join Startup on the Block.
Hello, everyone. Welcome to Startup on the Blocks. We're glad to be here on a Thursday evening. And there is Erika. Hello, Erika. How are you?
Oh, I'm doing wonderful. I'm so honored to get to join this evening. I love Startup on the Blocks. I love the work that you do, and I can't believe that I get to join you tonight. So thanks for having
All
me.
right. Fantastic. So we're definitely glad to have you back. It's probably what it's been 2 or 3 years since you were here.
Sounds about right. Yep, that sounds about right.
Yes, yes. But so we got some catching up to do then, huh?
That's right. That's a lot can happen in 2 or 3 years.
Yeah, for sure, for sure. So, but I'm excited about tonight, and I was excited to see your LinkedIn post where you were trying to help at least 10 founders raise some money before the end of the year. So definitely want to dig deep into that and see what that's all about. And I'm pretty sure some founders out there want to know how they can raise some money too.
Yes, that's the goal. That is the mission.
Yeah.
And yeah, that's what we're going to talk about tonight.
Yeah. So like I haven't, as far as what I've been trying to do in the past is just trying to make sure people get their, decent, business model that's scalable and learn how to pitch it and trying to connect them with resources in the ecosystem. But I really hadn't focused on stuff like safes, to kind of, help the founders raise money that way. And even though I know plenty of folks who did it, but so
Yeah.
I'm glad to see that you was focusing on that a little bit.
Yeah,
Uh,
it's something I've become like recently very passionate about. I think there are some amazing startup support organizations, entrepreneur support organizations that do an extraordinary job of connecting founders to resources and also preparing them to be investable.
yes,
But I think a big gap in how we support founders is, yeah, educating them on what fundraising looks like and how mechanically to go about it. And so it's kind of just taking that on as my personal mission, which is why you saw that LinkedIn post that I
yeah,
just had enough. And I said, this is the hill I'm going to die on for the next couple years. So we'll talk some more about that in the stuff tonight.
yes, yes. And I do want to publicly thank you for connecting me with the Make Startup Fellowship Program.
I
Yeah.
more roped you into that, Lloyd. I just said, Lloyd will be here.
Yeah, yeah, but it was a good experience, and I actually got a call from Make Startups today that I need to return the call, and so but got a new partner through it, so that's pretty fantastic, and be able to help some more founders out, and by the way, I did get a chance to go up there back in September, to visit Erika.
Good.
Yeah, so that was good. Yeah, really nice place, nice facility,
Mhm.
and everything. Yes. So I'm going to take a minute to kind of thank our sponsors to help us with who help us with what we're doing here, and so because we couldn't do it without them, and we also got some, I would say, some lean stack certified coaches, and so I think we probably got close to a dozen now. So but and then a couple of us three of us are even level 3 certified. So that's been a good thing for us. And we've developed a few few partnerships, and since the last time we we were together at Goody Nation. So
Yeah, this is incredible. I love this.
yeah. So but uh, and so Goody Nation and that's where we met, and
Mhm.
they help both help startup founders, and I think we were both in the workforce
Mhm. Mhm.
uh, thing, and so that was a good deal. And this Black Innovation Alliance, I don't know if you heard much about that, but they've been raising quite a bit of money
Mhm.
to kind of support uh, uh, ecosystem organizations.
Yeah.
They call them, innovation support organizations. But I think we need to all learn how to do a little bit more innovations, to kind of create some new stuff that to solve some problems and stuff like that. But we sort of have you noticed a lot of organizations using the Lean Stack platform, and because you've been out there a while working in the ecosystem.
Um, Honestly, I think you're the would be the first one that comes to mind.
Mhm.
I think a lot of organizations have relied heavily on the Kauffman Fast Track
Yeah, yeah.
program, just because they were a real early leader. But I
Mhm.
really think highly of the Lean Stack program. I think it's very product focused, it's very agile and innovation focused, which is great for tech based founders.
Yeah, yeah, yeah. And what I like about it, Ash has been doing startups themselves, and the Lean Stack is still a startup, I guess.
Yeah, that's true.
But anyway, but he's been working with thousands of founder teams, coaching them. So he's getting the skinny, and his program is in universities all over the world,
Mhm.
accelerator programs all over the world, and so. But he's literally learned a lot of things from coaching folks. So he's putting
Yeah,
all that stuff into practice, and we've seen the growth in the platform over the past 3 years.
that's awesome.
So that's kind of good, and I can't wait to dig more into the make startup stuff. Yeah, it's because with that platform, so definitely excited about that. But yeah, so we've been partnering to kind of expand our capabilities, and we learned that um, in the Goody Nation program, so as well. Yeah. What about the startup science thing? This little green buff thing. Had you heard much about that?
No, this is brand new. Give me the scoop.
Yeah, and I think I may have a chart in here on it. Well, let me scoop down. Scoop down. See, yeah. So basically, we have these 4 platforms. So startup science, the contrast Lean Stack, it focus on the
Yeah.
startup milestones that the startup has to go through. So like Ash's big thing is teaching people to get to this milestone he calls problem solution fit,
Mhm, mhm.
and and, and so it's a backstory behind that. But anyway, it's the point where uh, uh, um, you haven't built your product yet, but you're doing mafia offers and you're taking orders from the mafia offers, so that you're solving the right problem because people are actually buying your demo, and then you would giving you 2 or 3 months to build it.
Yep.
So you go from guessing will people buy it, they will buy it because you're out there taking orders. And he said that's a better milestone to get to, like in 90 days, instead of trying to get to the product market fit, because a lot of the ideas don't actually work. So you get a chance to try more ideas and not, in these 90-day things. And so that's really the logic
Mhm.
behind.
Oh,
Yeah.
neat.
Yeah. And then the startup science, it's actually life cycle focus. So, early stages, the vision stage where you visioning your idea and whatever. And then the exit stage is just the final stage. So he's been through 12 exits. So everything he learned about going through 12 exits, he put it in this program, how you get from one phase to the next.
Nice. Nice.
You see what I'm saying? And
Yeah.
so, yeah, so that's his approach. And but it's so practical, it's so down to earth.
and it's just no fancy terms. It's like really, really great. And both Lean Stack and Startup Science, they actually have tools in there to help the founder.
Nice.
Yeah, so you don't have to, in Startup Science, you don't have to you learn every term there is. You learn about safes, everything about raising money. But Lean Stack, it focuses more on trying to get you to the milestone. You kind of indirectly learn some terms, but you don't learn all the terms that an investor or somebody might ask. But it has what I like. It focuses on stress testing your idea in the first 30 days before you go out and try to build it. And that's what the idea behind those two are. Yeah.
Nice.
But yeah, so that's kind of the take on those. And we have some more sponsor type organizations that help us out too. This is just some of them that help us out, and we partner with some of those as well. So because people out there really want to help founders, get from one stage to the next, but you have to, that's just what the bottom line is. And that's the hardest thing for people to get is like, people are willing to help me do, like you're coming on to help people raise money. It's just a really, really neat idea and concept to kind of move forward. So you go ahead and take a minute or two to introduce yourself.
Okay. Well, good evening, everyone. If you've just been joining, my name's Erika Haskins. I don't know how to describe myself. I'm a bit of a dabbler at this phase in my life, which I really like. But I would describe myself as a startup founder, a startup operator. I am an investor, a mentor, and most of all, I love fundraising. So it makes me really, really inspired to be able to move resources in ways that I know will create impact, especially the impact that I want to see in the world and that I'm passionate about. So that is what has helped me get over the fear that many of us have of asking for money and just, realizing the potential of what comes of that when I can do that for organizations, for individuals, et cetera. So right now, the biggest project that I have on my plate is through the U.S. Economic Development Administration. So it's a big federal kind of office under the Department of Commerce. And for the next, I'm about 6 months in. For the next 2 years, I'll continue working on raising a small investment fund for startups in Maine. So Maine is 48th out of 54 states that attract venture capital for their startups, which means just across the state, it's called a capital desert, and their innovation economy is really struggling, which makes the economy very vulnerable. So this would just be a start of something that could build up that innovation economy and build up that resilience. And it's been a lot of fun. I'm learning a lot along the way. Some of what I've learned along the way also, as I was meeting founders, in the state of Maine, in addition to other founders I've met before, was this kind of gap in knowledge about fundraising. Know that they were investment ready, know that they needed to fundraise or that they wanted to fundraise, and just not knowing the terms and the how to. And so that's where, I'm doing a lot of work behind the scenes now, trying to build out that curriculum. What does that look like as training programs? So that I feel like in spaces of money, it can be very disempowering when you don't know the terms, you don't know the people, you don't know how to, and it's very easy to shy away just because of the relationship that we have with money. And so I want to break down those barriers and just make people feel really, really confident with those terms, with, those processes, and to go get money for their startups to build things that are really meaningful.
Fantastic. That's really great. I think that's an excellent thing to focus on and to kind of move the needle and get the ball rolling.
Yeah.
So can't wait to dig a little deeper into that. So let's see what else. I got a couple more things here. I wanted to let people know we're wrapping up our fourth cohort of the Black Founder Program, and then in the beginning of the year, we're going to have another launch program, a 90-day program. And so, but we're still encouraging people to go ahead and register, because what I'm going to do is I'm going to do a virtual class over November and December, so we can get some more people ready for the 90-day launch program. So it's just, you go to apply.kakuinstitute.org, and so and we'll have a cohort there, so you can get prepared to. We won't be doing any money associated with that one, but if you get through it and everything, you'll be able to get in the 90-day program, and then we will have some money at the end of that. Yeah. So take advantage of it if you know somebody. And it's not just for Florida. We let people all over the world participate.
Oh, nice.
Yeah. So that's a good deal there. And it's a simple idea. Is that you do these first two columns here, where you have a big idea, you put it on a lean canvas, take 20 to 30 minutes and do that. You know how hard it is for people to only take 30 minutes to do that. They want to spend hours.
Oh yeah.
But it's not, doesn't have to be perfect. It's a living document. And then so you take that big idea canvas, and then you break it up based on customer segments, and you do kind of like do a lean canvas for each customer segment.
Cool.
And then you stress test it for desirability, and if that customer segment doesn't pass that test, then you get rid of that for now. But then all the ones that pass, you go to the viability test, and it takes 5 minutes to do the viability test. And
What's the viability test?
Yeah, and so that's the neat thing. You kind of have a goal, what kind of recurring income you want to have in 3 years, and then you work backwards to see what it takes to do that. And
Cool.
it spits out a traction roadmap that tells you what you have to do each month in order to do that goal. So it's a pretty neat tool. And then you also test. So you may lose something there because it might not be viable. And then now you're down to 3 customer segments to doing the feasibility test. And then you create your business model story pitch after you do this, and pitch it, and start pitching it to attract co-founders, to get into programs, because like most of the applications that you fill out to get in a program, they ask you to describe your idea.
Yeah. Yeah.
But if you don't have the components in that description that they're looking for based on the business model, they're going to say, well, this person is not a good fit. You pitch your idea is you just learn how to pitch your business model at this stage, because you may not have built a product or whatever yet. But how do you feel about this idea of getting in a pitching competition when you just have a business model, and what do you think of that?
I think building in public is really powerful, because it just lets founders, keeps founders from hiding and falling in love with their baby, and gets it out in public and sees, how people react to it, what questions they have, like when do their eyebrows go like, and I think all of that type of information is good and helps you learn.
Yes.
May not feel good when everybody they would throw you off the stage of a pitch event, but if you're not hearing positive feedback over and over, but again, negative feedback or lack of traction helps us save the resource of time, right? That's and helps us pivot. So it's not a bad thing in the startup world.
No, and that's what the whole idea is. You don't want to be working on something that's not viable.
Right.
And so like all these interviews I've been doing over the last 4 years, I've run into plenty of founders that are working on stuff that's not viable. And why waste all that time working on it if it's not viable? And that's the whole purpose of this whole scheme here, is to figure out if something is viable as quickly as possible. Yeah, because and that's what and then the 90-day thing is you're doing the customer discovery and trying to get to this problem solution fit milestone. So that's what's so it's a straightforward approach, but that's what that's about.
Cool.
Yeah, yeah. So I think we're good there, and so I think folks have a good background about, you know, kind of what your interests are, and uh, so I guess my big question is, you know, what even got you in the startup world? And you said some stuff tonight too that I wasn't even familiar with from your past. Yeah.
Yeah. So it's really interesting. So I have a really interesting background. I actually started my career as a math teacher. I
Okay.
went to school to be an engineer, decided I did not want to do anything related to engineering, but you could take an engineering degree and um, uh, do an alternative path to teaching. So I was a math, science, physics teacher, math,
Okay.
chemistry, and physics. Um, my first job, though, I took was with a startup charter school. So the school
Oh
was
wow.
opening for the first time. So yes,
Hmm.
I had, my foot in teaching, but I was actually, my first job was in startup. And that was a network of schools that was growing really quickly. It was a really innovative model. It was a dropout recovery model. So it was folks that had to stop out of their traditional high school um, experience and just
Hmm.
needed another way to get a high school diploma.
Okay.
And we were opening schools, and you could access mental health care, you could access a daycare in the school,
Wow.
other service providers, career pathways. So after you graduated, you could still get certifications in the building. So people felt really safe. And that model expanded. So I opened 2 of those schools. I helped the network expand to 5 states in DC before I left.
Okay.
And then I moved to Boston to run and grow essentially an accelerator program for charter schools. And that's when I realized I didn't just love education. I think I am still so passionate about young
Yes.
people having a great public school to go to right in their neighborhood.
Mhm.
But what I realized I loved was helping the founders of those schools, and the communities bring it to life. Like 0 to 1 is what I
Yes.
realized that I love. It's like there's nothing, there's a dream,
Yeah.
make it to something, and then watch it
Yeah.
grow.
Hmm.
So that's when I was like, oh, I like startups. Like, I love startups. This is a
Okay.
really neat thing, and this is happening in like other ways other than schools. And I kind of just went down that rabbit hole, and that's where it's taken me in my career now.
Okay.
Not only supporting founders, in those early stages. I love 0 to 1. And getting the first check or getting your first grant,
Hmm.
it adds so much momentum, but also on the funding side. So it's just it's a good way to leverage some of my personal privileges that I have,
Hmm.
to make sure that underrepresented founders have access to the networks, access to the capital opportunities that they're so deserving of. So that's why I work both on the support side, but also on the funding side.
Yes. So like when we met, I think you were doing 3 day startup or something like that. And
Yep.
then all of a sudden you appeared with Make Startups. And I'm saying, where was it? I couldn't even keep up with you. And now you a fellow.
Yeah,
So,
I know. That's what I'm saying. Like dabbling, moving, lots of pieces. Really passionate about a lot of things, so I just try to contribute where I can.
yeah.
The reference, I've actually never read 0 to 1 as a book,
Okay.
but yeah, that idea of just the earliest stages. You'll hear people describe themselves as 0 to 1 people, and it means you like it at the very, very start.
Yeah. Gotcha. Okay. Yeah. Yeah. Corey is one of our lean stack coaches. He's a level 3 coach as well,
Cool.
and also an investor. Yes. Okay. So how did you get connected with Make Startups?
Make Startups was an organization I really admired, and you and I have talked about this a lot,
Hmm.
because the because I knew what they had done in terms of engaging the workforce system to fund their work. Um,
Hmm.
I'm also, a passion of mine is I want startup support organization like Kukua Institute to have a sustainable revenue model. I don't.
Yes.
A lot of them just chase grants. A lot of them
Yes.
go out of business because they don't have somebody that will, give them grants over and over, and it's really unfair, and it's not good for ecosystems to not have that reliable. So that's why I joined up with Eric and Grace to try and accelerate some of their efforts, and it
Good.
has, and they'll continue to keep going,
Yes.
so
Yeah.
that more people see that as an opportunity to sustain the venture development orgs in their ecosystem.
Oh yeah, that's good. Yeah, and you mentioned that in Maine it's like for was it for innovation being um, way down 48 out of 50. Yeah. So, but on a situation like that, um, and how do how do you get this innovation thing going? Yeah.
It's a
Yeah.
mix of things, right? It's not just capital. Capital isn't the only thing. A big part of it is workforce. So I think the state issued a study in maybe 2008.
Hmm.
Don't quote me on this, but like not that long ago, and there had only been like less than 200 computer science degrees granted in the state of Maine as of that point
Wow.
in time. So you that statistic alone, and I don't think I got that perfectly correct, but I got it pretty close, is
Yeah.
like, whoa, we, even our highest level institutions aren't producing um a labor force that could carry the innovation economy forward or lead on some of those new innovations. So that's where Rue Institute in Maine has come in to be a part of the solution to that problem, and they're doing phenomenal work, but they're still in the very early stages of it.
Gotcha. Gotcha.
Yeah, so that's a piece. Capital's a piece, and
Yeah.
also culture. Culture is a
Mhm.
piece. So
Yeah.
Maine is an amazing state that loves their artisans, they love their makers, they love the
Mhm.
environment,
Yeah.
and we are working to build appreciation and tolerance for risk so that folks really lean into people that are starting businesses that aren't um, Main Street businesses that you've maybe never seen before, businesses that
Mhm.
might fail, and that's
Yeah.
okay.
Yeah.
Building the ecosystem. So culture building's a piece of the work too.
Okay, good, good, good. Yeah, so we'll I guess get you into this talk about safes and so it's a real important topic for founders to kind of understand these funding options and how to take advantage of them. So if you like, you can go ahead and start on that presentation, and then we can just talk some more about it as you go, and also after you finish.
Yeah, okay, let's do it. Oh, that was so easy. Man, this platform is so neat. Guys, Lloyd's just got this stuff all together.
Yeah, let me also get this thing out of the way, and I'll let you go at it, and I'll be
Okay.
right here.
Okay, I can see the chat, so folks can talk to me in the chat. I did want to do a little bit of this workshop style again because I think I want to take something really, really small. I want us to talk about safes in the larger world of learning about fundraising. It's just an itty bitty chapter, but I think just learning this itty bitty chapter and feeling really empowered and curious to learn more could be a great starting point for folks, in part because it was an amazing starting point for me, fundraising for my startup. So let me get my clicker here. There we go. Okay, so I want to give you some foundational knowledge. It's not all the details, but just enough that you could talk about it. You could go read some articles and digest them. I want to give you some strategies for identifying investors that could write you safe notes or write other founders safe notes. And then what does it mean once you get one of those as a form of investment to manage it and think about your cap table or who really is a shareholder in your company. So let's kick it off. I've introduced myself. This is the screenshot that I took that is the passion behind this presentation, and really my work moving forward was I took a screenshot the first time I closed my first safe. So closed on an investment. My husband and I are co-founders on a tech company called Intrepid. And this just meant the world to me to be able to do this in Carta. And it fueled so much momentum in me. And it was so empowering of like, I brought an investment into our company. Nobody can stop me. I was just fueled with this new energy. And I wanted to share that with other folks. The reality is there's a lot of things that we can do testing wise, bootstrapping wise, but I think we should say out loud more that startups need money to make money. A lot of founders use their time early on to try and make money, right? They use their time building things or asking people to volunteer and scrap it together. But I think we just should say this out loud more. And sometimes it's because founders can bring their own personal resources to the table. Many of us don't have, that opportunity. And a lot of founders that I speak with and I mentor have been told over and over, it's too early for you to fundraise. And I really want to debunk that as a myth, because any of these, and you may have been in one of these scenarios before, is not too early to fundraise. Okay. If you're trying to build and you just need, a couple junior engineers to help you finish a functional prototype. If you have a product in beta, but it needs some features improvement, it's wonky that you would need to pay for, or you need somebody's help with. Maybe you actually have users on the platform, but you're not in a way that you're generating revenue, and you want to do some marketing work. Or maybe your revenue is up and down. It's a little bit of consulting services, a few users, takes a long time to close a deal. So I was seeing this a lot, and founders saying, well, I'm too early to fundraise, but I also can't move forward without money. And despite all of this, we know there are very few funders that can self, and innovators that can self-fund themselves. That's just the real world. It's really competitive if you want to go after grants. There are those opportunities, and I love that they exist, but everybody's going after those opportunities. And sometimes they're not, you put in so much time trying to get them, and it's for a little amount of money. And also, I believe it's so valuable for innovators to take risks, calculated risks. Not everything has to work, but the ecosystems really benefit when we try new things that take off and become unicorns, new things that take off and last, 5 or 6 years, and new products that just teach us, nope, that's not technically possible. I think all of those are good things to happen. So I want founders to think fundraising can be going out and raising $2 million round in a short time frame, and it funds the full startup for 18 months. Yeah, that's one view of fundraising. Fundraising can also be maybe $2,000, maybe even $1,000 at a time via safes to just continue, just make that next step, just keep moving the needle forward. You might not be going as fast as you want, but you're still moving forward and trying and building. So I think that also is fundraising. And I want founders to know that if they have the skills to do that they can keep building. And a great way to do it in that incremental way is through safes. So a safe is a investment vehicle. It's quite flexible and it's quite founder friendly. And here's what it stands for. So a safe means you make an agreement with an investor for an amount of money that investment isn't equity in your company right now. It's going to be equity at a later date. So let's get into why that's important. So let's say an investor comes to you, you've met, you've networked, and they're going to write you a check for $5,000. That would be a pretty good size safe, right? And I think a lot of people on the call today could say, I can do a lot with $5,000. And you're going to do it for a safe note. The safe note is not going to be equity in the company that day. It's going to become equity in a company when a conversion event occurs or a valuation event. So the conversion events usually are around valuation or when you're doing a bigger priced round. But what the safe allows you to do is not have to do all that back and forth negotiating. How much is the company worth? What are the terms? Who's the lead investor? How much equity am I buying? It's just we'll figure it out later. You need $5,000 now. We'll talk about it when you're going to put a valuation on the company. So that's how a safe is taking on an investment. It's not a grant. It's not free money. It's going to be on your cap table, but allows you to keep moving, and it postpones all of those back and forth negotiations until a valuation event. So they let you raise the money that you need to continue building or continuing doing a customer acquisition, go to market, whatever you need to do without doing the formal valuation. Formal valuation is something you want to push as far down the line as you can, because you want to see how much your business can make in revenue before you put a valuation on it. It's really, really important. And then when you feel confident that you can put a valuation on your company because you see your revenue is increasing, and investors are seeing that and really excited about it, you will have a priced round, and those investors will then have equity in the company based on the term of that priced round. So this is the trend that we're seeing for startups, especially when they're raising like full pre-seed and sometimes even seed rounds using safes. And this trend is only growing up. So like you see that solid black line is the percent of non-priced rounds bringing in safes according to Carta. So this would be like what's happening on Carta, assuming it's more reflective of the whole startup ecosystem. And then we can also see a percent of safes for round size. So for founders, that are raising less than $2 million, a majority of that is coming in via safes because they need the money, but they're not ready to put a valuation on their company. And this is the vehicle that lets you do that. Corey, I just mean formal valuation. When I say valuation, I mean, you're putting it in the terms of a priced round. I'm not sure if that answers your question. Or a valuation event, your first valuation event. Okay, so a few terms that I think are super important to know around a safe, especially if you're like, okay, I want to maybe go into a safe agreement with an investor, are these three. I think there's other terms that you could learn, but for really simple safe agreements, I think you want to know what a valuation cap is, what a discount rate is, and a conversion triggers. All right, so let's talk about valuation cap first. So a valuation cap is written into a safe agreement. And it says, basically they'll receive equity at a lower valuation. So maybe at a $3 million evaluation, even if the valuation is set at $10 million later down the line. So let's give you an example. So let's say you went into a safe agreement with a valuation cap of $5 million, but then when you did a price round, your company was valued at $10 million. Well, that investor gets a really, really good deal because they get more equity because they actually bought at a $5 million level, which is like twice as much equity. So that's a val cap. A discount rate. A discount rate is a way to set a percentage reduction applied to future shares that investor might buy. So it's almost like they buy a coupon for shares in your company. An example of this would be, let's say your safe agreement has a discount rate of 20%, and later down the line, you have a valuation event, and each share in your company is priced at $1. That safe investor can then buy them, though, for 80 cents. They buy shares at a discount. So that's great. And then conversion triggers, what are those? I'm talking very optimistically about priced rounds coming down the line, and that's the assumption that the startup is going to continue to grow and thrive. Acquisitions also happen, right? So safe could convert to equity right before an acquisition. Or if the startup dissolves, that's a conversion that the safe may have written that some of that money goes back to the investor. Usually investor just loses the money when it dissolves, but that's what is meant by conversion events or conversion triggers. So these are the three terms that I picked out that I think are the most important to like study and figure out how does this from a math perspective translate, at those conversion events. For us and our company, for Intrepid, right now we issue safe documents. We do not have a valuation cap, so we keep it very friendly to us, and we offer our safes at a 30% discount rate. So we don't even we are staying so far away from putting a valuation on our company, but we want our investors to know, hey, if you come in early, future shares you can purchase. Your shares are going to be worth something different, and you'll be able to purchase them at a 30% discount. So again, a safe document, and I want you to do more homework on this, and none of this is financial advice, disclosure. None of this is financial or legal advice. I just want you to study and look into this more. It's a vehicle that's very founder friendly. Mostly because it's fast and it's simple, and it says we'll worry about the details later. when that time comes and it's appropriate. I'm so early stage. I just need this now to continue building. Safes are great because they can build in really good incentives for investors to follow on with their investment, which is good for you, which is good for them. And it delays the valuation. You don't want to value your company too early. It can be really easy for, founders. If you join Techstars, and I love Techstars or other accelerator programs, oftentimes those founders companies are valued quite low, $3, $4, $5 million on average, when they have the potential to be 100, or even $100 million companies, and that's not friendly to the founder. So that valuation you want to delay as long as possible. I'll pause. Actually, Lloyd, do you have any thoughts? Or maybe we can take questions in the chat. Again, I'm not giving financial advice, but I wanted to explain, some about the vehicle, some about what it means for moving money into your company. Would you put safes on par with warrants or convertible notes, popular in angel funding? How's safe? Oh, compare with raising business credit. Right. Okay. So I'm going to go with convertible notes first. Safes can be more founder friendly than a convertible note. And that's actually why they were kind of invented by Y Combinator, because of no accrued interest. And it's not debt, right? So you're not paying it back. It's going to convert to equity. Raising business credit, again, I think it just protects the founder instead of raising debt. Yeah, that's what I would say. These are really great questions. Corey knows his stuff.
Yeah, so it's kind of trying to think of how to say this. So you're introducing something that may be new to folks,
Mhm.
but folks right now they may think that the only way you get the money you need is you have to go out and get a loan, and you have to have good credit to get the loan.
Got it.
And they maybe thinking, they have to be making money in order for somebody to invest in what they do. But the way you presented what you presented, it sounds like it's actually easier, than that.
Yeah, and I don't, how do I want to say this? I want to be sensitive to the fact that it may not feel easy, right, to folks
Yeah,
like that.
it's
So I
hard.
want to be
It's
sensitive
crazy,
to
I
that,
know that. Yeah,
but also empowering in that, this really exists, and there are likely individuals or even businesses. We'll talk about who accredited investors are in more than you would think if we sat down and we had a talk in your network that would listen to your pitch, hear, oh, you only need $1,000 or $2,000, and be able to do that in a day or two, to get you that money in a day or two, because they care about you, because they see all the effort that you're putting in, because they think it would be exciting to kind of be on this journey with you. That and safes are an excellent vehicle for that type of investor arrangement.
Yeah, fantastic. That's kind of good to know. We did a show. I don't even think it's been a year. It may have been a year. We had a gentleman that wasn't even up and running, but he had made maybe a little bit of money, less than $1,000, and he went out and raised a little less than $100 using 100,000 using SACE, and he only had like 300, less than $1,000 in income, but ultimately he raised almost $1 million in less than a year using SAFEs.
Yeah,
And he's
because
still not up and running making money.
oh, he's still not. He's still pre-revenue. I mean,
Yeah.
it can take a long time. It can take a long
Yeah.
time to get to revenue. Yeah. So, I mean, some angel investors, still for the sake of founders being able to move fast and for the simplicity of it, there are angel investors that have the capacity to write, 100K checks, and that is how they do business as individuals. And so that's where you'll see like founders actually going out and raising, $1 million without evaluation, all by using safes and this vehicle, and just lets them move fast.
Yeah, I think the point you mentioned to me a while back was, this idea, if a person, depending on what they're working on, to move forward, they may need just $5,000-$10,000.
Yep.
But I've been telling them to go out and win a pitch competition, but and or get in a program that gives you money. But I guess I don't think in all the 4 years I may have one person come on and talk about the stuff with the cap table and stuff like that, and raising money. But I'm definitely glad you're on, just trying to give a little bit more details and give it a little bit more insights about it.
Because you are correct, at really early stages, founders should be looking for non-dilutive prize money, no strings attached to build and take those risks. But when those are only happening every 6 months and they're going to be hyper competitive, this is another vehicle to just let you move fast, and just take more charge of that instead of waiting for the pitch competition. And sometimes that just being a popularity contest. And maybe you don't even need that much money. Maybe you don't need the $10,000 award. You're like, I just need $2,000. Do you have to be an accredited investor to write safes? Yes, you do. And you should have, if you're going to accept a safe, someone should self-disclose, right? And that's all that you need. How do you start a relationship with those who can write safes? That's great. Tony, I'm going to use your question to transition in my slide because it's like a perfect segue. Tony, do you have my deck in front of you? That's wild. How do you identify these folks and engage investors? So first, let's talk about who, and there's like a legal, like federal definition for this, who accredited investors are. So individual people who are accredited investors, it means that their personal income, if they're single, is $200,000 annually as an individual, or if they're married in a spousal relationship, their combined income is $300,000. So the first thing that I tell founders is like, do you know people that work in tech? Like, do you know people that work in big companies? So think, they engineers, engineering managers, things like that. Very oftentimes, and it kind of depends company by company, they are accredited investors and they don't even know it and they don't identify as it, right? Because they're not thinking about startup investing, and that's fine, but they are actually accredited investors. Other people that have a net worth over $1 million, which excludes their primary home. So perhaps they have a trust left in their name from or multiple properties, that they are airship properties that now belong to them. That net worth can all build up, and could classify them as a accredited investor with or without the income levels. There's also some professional associations. So technically, if you work for a family office, you are not a part of that family, that wealthy family, but you work for their office, you're actually an accredited investor. If you work for a fund, like if you worked for a VC fund, that entitles you to be an accredited investor, which is crazy. You could just be an associate, and they were paying you $70,000, but because you work for a VC fund, you're an accredited investor by professional association. So think about that. The other thing that I don't think is shared enough is that LLCs, 501c3 nonprofit organizations, trusts, corporations, partnerships, etc., if they have assets above $5 million, which are still, small businesses are still in this category, right? They are accredited investors, and those entities are able to issue safes. So our company has taken a safe from a corporation, so a business instead of an individual. So do the founders create a safe, or does the safe already? Yep. and people already wanting to invest. The engagement, I think, looks like a founder putting out the ask of like, is this something that you'd be interested in, partnering on and perhaps coming in as an investor? And the person responding to be like, yeah. Founder says, okay, well, what about at what level? Would you be interested in the $2,000 level, $5,000, $10,000 level, and kind of talking about a number, and then the founder introducing, okay, well, at this point in time, I'm doing these investments through a SAFE agreement. I would love to propose you one, and then you could draft it on, and then go back and forth and talk to them about the SAFE agreement. Or you could just say, we're doing this type of SAFE agreement, kind of like my husband and I are. This is the only type of SAFE agreement that we're offering. It's a discount, no value cap. Have them read it. They sign it. They write you a check. In 2 days, you got money. Does that help? And also, there are templates of SAFE agreements that you can go in and you can just change, what you want as a value cap or zero value cap, what you want to offer as a discount. Y Combinator makes theirs very available, and that's the first one I'd say go to and look at. Yes, so it's not something like a legal doc you have to have somebody legally drafted up. It's like these templates exist, and you just go in and you change some numbers for whatever terms you want. Where are you going to find them? Again, I encourage people to really think about the accredited investor status, because not all accredited investors, one, know, and two, are marketing themselves as accredited investors if they do know. So you might have more in your network or second degree network than you would think. Other than that, a lot of this is, again, the building out loud, going to a lot of community events and telling people what you're building. And also that you're taking on investors through Safe Notes at this time. Just be very open about it. There are networks like angel networks. So investors sometimes like to share deals and co-invest in things together. And they make those pretty visible, on the internet. Pitch events are great, even if you don't win the prize, but you got your idea out there and somebody comes and wants to talk to you after about giving you a $5,000 check. That's awesome. There's databases that you can pay for and you can find out some of this information. And also you can just find out on LinkedIn. People that really want to be active in their startup engagement through SAFEs are often talking about it on LinkedIn or on their socials because they want to talk to founders. They're like, yeah, I do this. I really love supporting founders. I understand what a SAFE is. So the more I think that you can build and share in public, the more you're just opening opportunities for those people to come into your network. And that it feels like a super general answer, but that would be my go-to answer. They're not hiding under rocks. They're not all hanging out at a secret underground club. Okay, so what does it look like? And I want to pronounce this correctly. Fabrice, I hope I did. Fabrice asked this question. We kind of talked about this. Well, how do you do? Somebody said, yes. What do I do next? Well, you're going to create the agreement. Templates exist. I think that you should feel empowered to just set your own terms and just say, like, I'm going to do the same safe note. We're not going to negotiate this. We're just going to do it fast every time. You send them that agreement and they sign it and you sign it. So you sign paperwork. They write you a check. You put the check in the bank. You can start to use cap table management software. So somebody that like Carta is a great example, and Carta is free for you for a really long time. Just so that you can watch, like, who are you're adding people that will eventually own pieces of your company. So you want to keep track of it, right? Like, you want to keep a list of who owns or will own at some point small pieces of my company. And then when you have a valuation event, you will do the work to convert that to equity, and it'll be more formal that they own equity in your company. And you're off to the races. You're growing at that point if they're converting to equity. It's kind of crazy. It's like, oh, I signed a document and I get money. You sign a document and you get money. It's pretty awesome. Here would be, Carta would be the go-to, and this is not sponsored. Carta would be the go-to tool I would start playing with if you want to raise with safes. because they have like a doc send feature that you can just send the agreement right to somebody to sign. You sign it, and the money goes in the bank. Fidelity and Diligent, I haven't seen. It's called Carta. Carta, this one right here. It's the big one. It's very, very user friendly, and it's free to get in there and play. Yep. But I've heard that Diligent and Fidelity also offer this, and that they're very quality solutions as well. So see what you can get for free and see what you like doing. Also, I'm sure that there are Excel templates that work to let you model this out, but I think I would still recommend you take a look at Carta. Okay, we're getting close on time. Oh, good, but we're close to the end of my presentation. Some of this is like, go digest knowledge and connect later. We're figuring things out. So I always am really, generous with my contact information. I love meeting with founders. Everybody has access to my calendar for sure, if I can help you navigate this or other things. So please do reach out and connect with me on LinkedIn. Lloyd, what are your thoughts?
Well, some things did sort of pop in my head a little bit. I like the idea of safes, and I do know they're founder friendly. But how are you tracking how much equity you potentially are giving away?
Yeah, that's good. No, because you are dilution is a thing, and you're not having to sit with it at that point.
Yeah.
That's another thing that cap table management software can model for you. So
Okay.
you can't exactly see it again because your company hasn't been valued, but it lets you play with like, how diluted am I if I'm valued at $10 million? How
Okay.
diluted will I be if I'm valued at $25 million? And so that modeling at any point in time, as you sign in and you're collecting other safes, you can at least keep a real-time picture of like, what am I actually selling of my company, since it's not being sold right now, but it would be sold later.
Yeah. So
Yeah.
depending on what it sells for, that actually what determines the amount of equity you
Exactly. Yep.
Yeah.
That's a really good question, because it would be easy to be blind to it. It's like, I'm not selling equity right now. I'm selling future equity, and not keep track. But it's tools like this that allow you to be disciplined and just watch that and be realistic about it.
So this might sound like a silly question to folks or whatever, but is I heard you say a lot of things as you talking about how you did it, but did any of the investors that invested in your safes, about did any of those check your credit or anything?
No.
I asked that question for a reason.
Yeah. And part of it is because individuals that will invest like this do have a high risk tolerance. And if you have to educate them, actually, I have had success with this, or this is a way you could say, hey, listen, like, this is a business partnership, but also you should be thinking about this investment as gambling money. Like, if you wouldn't gamble this amount of money in Vegas, you shouldn't be investing it in me, because that's where we are in terms of risk exposure this early on. And that's a way to be really, really honest with somebody that might be, being like, I didn't know I was accredited. Yeah, I really want to help you. Like, I could give you $2,000. Would you gamble $2,000? Because that's a risk exposure. If you would gamble $2,000, we're in a match. Like, let's go forward with the safe. Let's keep building this. If not, that's okay. That's okay. Like, at a different time or a different amount or something like that. How are founders typically vetted? This is
I like this question.
this is great. These deals can happen over a drink sometimes. Sometimes they want to see a deck. Sometimes they are eager to see a demo, or would only consider it if you can show them a demo of an MVP. If someone is vetting you, though, like over and over and over, leave it. Like, that's not the type of investing engagement that you want to go into. You want somebody that's just really inspired by you, sees a deck, gets it, maybe asks a few questions, can think of some ways they can help you beyond the check. Yeah. So Corey, if you're going out and you're trying to raise safes and somebody's vetting you or doing due diligence on you, just abandon ship. That's not who you want writing you a safe.
Well, so the reason why I love that question, because I've been telling people, that you have credibility through your visibility in the ecosystem.
Oh yeah.
If people see you, participating in this program and that program, they see you making progress and you're
Exactly.
getting traction. That's what the vetting is.
Mhm.
Yeah, and that's a hard thing for people to understand and believe, but that's the honest to God truth. If people see you making progress and getting some traction with what you're doing, yeah, they
Yeah.
they take a chance on you.
Yeah, and just not giving up. That can be so inspiring to folks, um, that they just want you to keep going no matter what, even if you make mistakes, or it doesn't work out the way that you wanted it to.
Yeah, yeah, but it does, and that's why I always says if you learn the best practices, and it's not this is not just for startup stuff. It's just if you have credibility, people will take a chance on you.
Mhm. Mhm.
Yeah, your credibility is your visibility, and people see what you're doing and what you're engaging in.
Totally. Well,
Yeah,
I hope everybody is gonna sit down tomorrow, Google safes, do, a little more interesting research or, YouTube if audio visual is more your style. Um, Learn a little bit more about safes, maybe make a list of 5 or 10 people you're like, "I think that they would be accredited investors." Or even sit down with Lloyd and generate a list of, like, who are 10 people in the Cocoon Institute, that I could just practice, right? Or that, if you're not already connected, could get connected and start building that relationship. So I hope that those are the next 2 steps for folks. Um, and again, reach out to me. These templates are easy to find and access, but if you don't feel like you can find them, just say, Erica, could you send me this, and I will send you link,
yeah.
documents, everything.
And I think the message there too is just about everything related to startup is open source. You can find
Mhm.
it.
Mhm.
Yeah, it's not that big a deal. It's just as open as it can be. So anybody else has any last minute questions? I think you open up a lot of eyes, minds this tonight. So I'm glad you got a chance to come on. But so your goal is to kind of help at least 10 founders before the end of the year raise
I
some money.
do. I want 10 founders to be able to take that same screenshot I showed you at the beginning, and I took that screenshot in Carta. And that screenshot happens if somebody writes you a check for $500, for $1,000, for $5,000. But that win for you as a founder to know, like, you brought on an investor that's the juice I want you to have going into 2025. So anything I can do to help make that happen, I totally will.
Yeah, and so I guess the simple thing is I saw your post and I said I'll be glad to help you do that.
I love it. I can always count on my voice.
Yeah. All righty. Any parting thoughts for the audience before you leave?
Nope. Thank you for just the courage in the businesses you're building, in the products that you're innovating with. Um, I want you to keep going no matter what. And thanks for hanging out with me tonight. I hope it was helpful.
Yes, and looks like you got people already
Woo
connecting.
woo! New connects. All right. All right.
All righty, fantastic. All righty, well, we thank you all, and we'll try to. We're gonna have a tough time getting a guest as good as you and David was last week. We had a really good thing. I ended up, and so yeah, David is an interesting guy and great career, and I think this idea, these relationships, sort of keeps you moving forward and create new opportunities for you. Yeah.
I agree.
But if people don't know what you're doing or what you're interested in, they're not going to connect you with opportunities.
Yeah, you're totally right.
Okay, fantastic. Thanks a lot. And I'll keep trying to help you. We got
Send them my way. Send
a
them my
month
way.
to go, 2.5 months to go. All righty. You take
Yeah,
care. And
have a good one.
everybody for listening in. Appreciate you all. All righty. Good night.